Welcome to Price Discovery. Another week, the three friends get together to talk markets and trades. We've got Alex Markl, Mike Mtenga, me, John Cutrone. We're here every week to see to talk about what we're seeing, and I think we're ready to dive in. We like to start with the big asset classes like Bitcoin and equities. And then get into macro and then see how it all ties together with trades. So let's start with Bitcoin. Per usual, I'm gonna kick over to Alex. What is happening with Bitcoin? Have we bottomed? Is the timeline correct, or is there more pain to come?
Nothing has happened. That's for sure. The timeline is sort of getting bullish. I don't know how your timeline looks like, but mine has definitely gotten a bit more bullish, and I've seen some bottom calls on my timeline over the last week. I unfortunately tend to agree, which makes me a little bit uncomfortable.
Oh no! All right, Mike, we're selling everything.
But yeah, we're basically just consolidating. It really looks like we're building some sort of bottom here. We couldn't really break below 60K. We've tagged it a few times, but seems like 60K is the value zone where a lot of capital is willing to step in and defend that level. So unless we see some, exogenous shock to the market, something that would trigger like a macro risk off, or some more fears regarding MicroStrategy, I have a hard time seeing the market trading below 60K again from here. So cautiously optimistic is my view here.
Okay, Mike.
I think what I've picked up that is positive is, and I think from just our trading experience, you do want to see very good spot inflows, and a good barometer is always the ETF flows. So just extremely positive on that front. Last week, just sort of trickling maybe 100 to 200 sort of like every day. So I think that sort of made me also, sort of optimistic, like higher probability that we go higher instead of lower. We've just been grinding up, and I guess like on the lower time frame as well, which is where I'm normally sort of nested, is you're just sort of getting like dips, whatever, micro dips are sort of getting bought, and markets putting in higher highs over time, and lower highs are basically, higher lows are basically sort of being formed. So I think price action wise looks positive, fundamentals look positive as well. I think what the next question is around, narrative wise, what is driving this price action or the bullishness for BTC? Is it more of a sort of like correlation trade because we've seen gold is looking really positive, debasement, maybe that's it, dollar, maybe it's dollar weakness as well that's sort of driving the price. So I think that's more of the interesting question, and it'll probably also be quite key in terms of like how far we do go if we do have a breakout, because the narrative is very, very important to sort of like BTC. So it's like, we need to have something, we need to have a strong narrative. I don't think correlation can drive the market up for like very, very, very high, because eventually, these correlations do sort of decorrelate, and in some cases, correlations can pull the price down. So you really need sort of some idiosyncratic narrative to continue the I guess continue the bid for BTC.
Yeah. I'm of two minds here. I think supporting both of your points. I think CME net positioning in BTC futures is now positive, which for the first time in a long time. And yeah, I mean, look, if I think if we were a year or two from now looking back, we'd be like, all right, yeah, like if 60K or 58K was the bottom, we would look back and be like, oh yeah, like that looks good. That looks like a solid bottom. On the other hand, I think we have more pain to come. I think that I think seasonality has not been proved wrong. A bear market takes about a year. We have not gone a year. So I think we do see 55, maybe 50K. So if you're a trader and you want to scalp that, great. I think you can probably wait until September, October, maybe into Q4 for that bottom. I think it'll come. If you don't feel like catching that falling knife and just getting in now and knowing that you're not going to give an F at 100K or 200K, I think right here is like, I've been saying this since June. This is a fine place to DCA. DCA around 60K, you're going to do fine. Looking back, sometime next year. So I'm not buying yet. I have some bags that I don't touch, but I'm not buying yet. I'm gonna wait until at least that September, October timeframe, right before the midterms. I think fear is gonna peak around then. I think that we'll talk about macro in a bit. I think Warsh wants a steep yield curve, and he wants pain in order to get inflation down. And so all this comes together in that I think that this is a fine time to DCA. This is probably not the time to go all in. And if you're a trader, I think you can probably wait for a better entry. If you're not, and you just want to DCA, which I'm going to start doing soon, we're right around the 200-week moving average, right? It's like 62, 63K. That's kind of where we've been anchored to. Yeah, see if you can throw that up. Where is it now? Yeah, we're right there. Okay. Historically, we can go below that here. So yeah, it almost doesn't matter what takes us down. So that's my base case.
Got it. Yeah, I mean, I understand your slightly cautious arguments. I kind of just I'm slowly getting a little bit jittery about that we haven't really been able to make new lows on what was peak FUD. And I mean, I was bearish when we were trading down from the little relief rally that we had, and we were trading down to 57, 58K on Sailor FUD, which wasn't really FUD. Those were genuine concerns. But the market has held the level on, which was quite bearish, like a bearish catalyst. And now it seems like the situation is getting a little bit more relaxed. Sailor is shoring up cash. There's not, it doesn't really look like there's any bearish catalyst left. I think it's just apathy at this point. People are just really sick of this market, sick of this low volatility grind. It's Bitcoin's just going nowhere. Hasn't gone anywhere, basically since February. So these are all signs of a bottom to me. So if I think it's the bottom, or we're kind of like forming a bottom here, then I kind of have to ask myself the question: is it worth the wait to maybe be able to buy down at 55, or do I just buy here? Because it's obviously not guaranteed that this thing is going to trade down at 55. You definitely need a strong catalyst to trade back down there. it could be something maybe related to the Fed and wars, like you said, but it's not guaranteed at all. So if you're investing and you're targeting 90, 100K plus, I don't see it making sense to wait from here, and I would just allocate now.
Yeah, I'm sort of that mind that, and I'm not here yet. I'm not buying yet, but I'm at the point where let's not get too cute. Let's buy. Let's start buying, and expecting maybe that final capitulation. Maybe I'd say probably that final capitulation. But even if it's probably, I don't think you necessarily need to wait to go all in at that level. You probably want to like double or triple up your DCA on those days and weeks. But I think you can start building that position and just have a really solid portfolio by the end of the year, and then I think you just let it compound through the next couple of years into hopefully what is the next bull market. But yeah, I don't know. The other thing to consider. Yeah, I think it's a great point. Apathy is a catalyst. It's there's no volatility. I'm in this for the excitement. Some people might say, I'm in this to outperform NASDAQ or memory stocks. Maybe if that's not happening, it's just like, why am I in this thing, right? It's opportunity cost could be the catalyst. But yeah. So I tend to agree. I'm not there yet. It's kind of nice. It's kind of nice not having to worry about it, right? I'm chilling in stocks and gold, and it's been working. But Mike, final thoughts on Bitcoin. What are you watching for in order to make a move?
Yeah, I think I think narrative really. I think in terms of just catching the move, or okay, this is where it's going to start sort of like making the move. The volume has been so low, and I think it makes it much easier to sort of like just catch when the move is actually going to be happening. To the downside, I think there's still so much way down to go before I can sort of be bearish in the short term. I think you need to first, the market needs to break, I guess, like this sort of 64 level, and that sort of makes sort of like a market structure break on the low time frame, and then from there, the market has to trade down and then needs to establish whether it's gonna sort of make a lower low or make a higher low, and that still sort of like makes sort of like Alex or myself's bullish view on BTC still valid. So I think in terms of BTC, it's just sort of like a waiting game, as it has been, right? The market really hasn't gone anywhere. It's just been, sort of like, chopping, grinding up, sort of waiting for the next move. But I think we are starting to sort of see like, sort of small early signs that there is some, positive allocation, as I mentioned before, ETF flows. And then, you could also make an argument for this sort of like apathy, as a potential catalyst. And the other thing that could be quite interesting as well is if there is a narrative, which is probably the last piece of the puzzle for BTC, it's going to move quite aggressively. Because people will sort of like it's going to be the trade. I mean, it's trading at a really sort of like very low. And I think sort of the headwinds for BTC are probably like not there. I think it's just waiting for the correct tailwind, and then it's going to go. Yeah.
Yeah, it is. It kind of reminds me of like 2022 and like early 23, when everyone was there were a lot of, not everyone, but there were a lot of people when we were trading like 18 to 20K. There were a lot of people who were saying like we have to retest like 14K, because like 14K was kind of like some important level like way back in the day. And for like that tiny tiny difference in price. Like they weren't buying at 18, which was the bottom, and it kind of looks similar to me here, where yeah, can it go to 55, maybe even 50 potentially? It's probably a low chance.
Yeah.
And it just doesn't make sense from like a risk reward perspective.
Yep. I think to put a bow on it, my view, if you're a long-term holder, this is a great spot to start DCAing, but I think be ready to double, triple up those DCAs below 60K. I think we'll get them. But if you're trying to put on leverage or options, or you're a short-term trader, or you're running money, it's probably not the best risk return right here. You don't have momentum up. You don't have the typical capitulation signs. It's kind of this like vibey feel that that maybe we've run out of bear cases. So yeah, that's kind of how I feel. All right, moving to the next asset class. Do we want to talk about gold or equities from here?
How about we do gold? I don't have much to say on gold, so
gold's my favorite. All right. Well, we can take a victory lap here. All right, we were giga bullish before this jump up here. Okay, so applause, back pats, high fives, whatever. It's like a 10% move or whatever that is. Nothing crazy, but gold is something you can really back up the truck into, which is what I did. Now this was back in June, and so and July, but yeah. So I don't think we immediately get another leg up, but I think that we are forming a bottom. I think this is a fantastic asset class to have a good chunk of your portfolio in right now, 5, 10, 15%. And I think you hold that till the end of the decade. I think you see this like final leg to this sort of decade long, maybe commodities in general, but especially gold. The only chart that's been up only to the right is debt, national debt. It's just right. There's no corrections. It only goes up. So, so yeah, we're starting to see Korea buy, China's buying. I think everyone's going to be buying. And I think you want to start accumulating. If you haven't already, I think that you want to start accumulating, because I believe we are forming a bottom, starting to potentially break out of it. I'm not like Super Bowl. I'm not like, all right, we're going to 4K right now. I think we kind of chill here, maybe come down a bit, but then I think we really take off up to 5K and eventually 10K in a few years.
Yeah, probably I agree with you. I just sold.
If you're trading it, a great place to trim here.
Yeah. I mean, I think we had the same entry, right? Like we both were buying at 4K.
Yes.
What was kind of painful to hold, not gonna lie, like that bottom took a while to form. You were getting tested quite a lot on your entry. I was sweating a little bit here and there, but just held it through. And like when it tagged like close to 4,400, and I was just thinking, 10%, that's good enough.
Mike, strong opinions here on gold.
I think gold is something to watch right now. It's had an aggressive move. I think it's just figuring out like whether we're going to have a grind up and momentum from here. So it's definitely something that I'm watching, especially like lower time frame. One thing that I found pretty interesting is just where the bid is coming from. A lot of the movements that you're seeing are coming from just the Asia session. That's where you are seeing majority of the moves taking place, and I think that's just indicative of the bid is where the narrative is driven right now is definitely sort of more Asia, China, Korea. So I think if you're sort of like short-term trader, that's where sort of like the catalysts align in terms of like price movement. And I think just in general, for more momentum or longer term momentum, if we can see some form of like US market bid or volume, huge spikes there, that'll be, you know, also fantastic for the narrative in general, and for you know, whether there's going to be continued momentum, because, you know, obviously the market's moved quite a lot, and you know, there is obviously the more higher it goes, the more the higher probability for some form of like, you know, correction and stuff. So I think it's just figuring out, okay, you know, whether we're going to have like more of an extended move on gold, or we're going to sell off a bit. And I think because the market is sitting at an inflection point, it does make it interesting to watch in terms of you know, what's going to happen next. So it's definitely something I'm keeping my eye on. And yeah, I tend to agree with you, John, in terms of yeah, the narrative is still definitely in play. So I think sort of all the ingredients for some form of like longer term bullish accumulation are, you know, in place. You've got a very good narrative. You know, volumes are pretty decent. And I guess like the missing piece of the puzzle is just, you know, I would like to see some, you know, US session volume coming in. But other than that, I think, yeah, really good on gold.
Cool, good stuff. I think the third leg of this money printing stool, this debasement trade, is overall commodities, and specifically the miners of those commodities. One of my trades a few weeks back was at XME. This is I think it's like Spider Metals and Miners. This is just like a very, you know, low cost index that tracks kind of like an additional, like a similar trend to I think what's pushing gold, but it's not central banks. It's just inflation and money printing and debasement. And it's also the AI trade. So XME is up 15% since that call. And I think this is like, you know, in addition to your equities and any other kind of risk assets, I think you want this sort of Bitcoin, gold, commodities, miners, and they complement each other really well. I think you're gonna get. I think it's a really nice short-term trade. It already has been, but I also think it's a really nice long-term trade from here. So yeah, you know, and it's part AI trade, part debasement. But yeah, this is another favorite of mine because you're seeing all kinds of commodities like copper, palladium, silver, like all these are going up and to the right with data centers, with space, with robotics, and with chips. And so I think it's you know, we talk a lot about, we'll get into equities next. It's the reason there's so much volatility in AI stocks is we don't know anything. Like we can't, like, we think something's dead, all of a sudden it's number one the next month. We think something is like God, and then all of a sudden they're thrown out with the trash. It's tough to know where value accrues in equities. I think you could be much more grounded in thinking that value is going to accrue to the input materials, and especially the miners of those. So that's why I think XME continues to be a very nice, yeah. So copper is pretty much a good correlation with this as well. I think this is just like the new portfolio that's going to do well in this AI and money printing age. It's not just like stocks and Bitcoin. I think you have to have stuff like gold and commodities and miners. Thoughts, guys?
Yeah, thesis absolutely makes sense. Like we're seeing, you know, a lot of the AI labs coming under pressure, and it feels like that side of the trade is anyway hard to get in. Like you can't just buy like Anthropic equity like on public markets, and I think
you probably would have got wrecked if you did.
Yeah,
right? Imagine when everyone was thinking Anthropic can do no wrong, it would have been way down from there.
Yeah, right. I think like open AI pre-IPO perps, like those are, I think, listed on Bybit or something. Those are down as well over the last couple of months, like by quite a bit. Actually, Lighter has them, like no liquidity, but yeah, you see, like they're down a bit. So yeah, like you can't really allocate to that trade, and I think it's questionable anyway whether much value accrues to these AI labs or the model layer. The obvious one, like in most bull markets, is always like sell the shovels, and shovels are like the chips and what goes into like making the chips in the data centers, which is commodities, right? So that thesis just intuitively, it just makes a lot of sense to me. Yeah.
Mike, thoughts on commodities miners, or are we ready to go into to stocks?
Yeah, I don't think. I mean, personally, I think the probably I guess like application AI trade is sort of like you're not there. So yeah, in terms of where it is currently, I think it's very difficult to sort of simulate. I did see Roundtree launch a new ETF on, I think it was last week, Friday, around like sort of the fiber optics or the transfer. And I think it just shows that maybe, the trade is more around like the materials to build out the hardware that's required. I think the semiconductor trade was like very indicative of that. So I think what the market's searching for right now is just like, where is that next sort of like DRAM type trade going to come from? Because it does seem like the fuel for sort of like application layer type of AI stocks is not there anymore. I think we've seen like crazy unwind, and I think the market's just sort of like looking for this new shiny toy that's going to sort of like represent this narrative, which I do still think has legs, right? The AI trade still does have legs, but it's just where are we going to sort of what's the next sort of like I guess like price discovery that's required for I guess like trying to roll out this new sort of like innovation in technology. So yeah, that's sort of my view on I guess like I guess commodities, but also on a bit of AI.
Yeah, I think that this dovetails nicely into, I think, equities. And equities is really just like AI. It's like, are you AI or not? And yeah, I think all the really good setups, I think, are AI related. But that said, you can probably just hold the S&P, like yeah, and sleep really, really good at night, because the S&P has a lot of stuff that AI is going to take the longest to disrupt. Highly regulated stuff, highly physical, machinery and mechanics and engines and all that stuff. Like robotics will eventually come for that. S&P, I think, yeah, it's just it's at all-time highs right now. A lot of indices are, but yeah, I think it's still. I can make a much stronger case that you want to actually be in. You want to make more tech heavy plays right now. I think maybe there will be a time and a place for a huge rotation away from it. I don't think we're there yet. We're very much in the vertical part of this AI cycle. So where does value accrue? It's like almost 50-50 whether like the Anthropics and the OpenAIs can go much further from here, right? They're already basically trillion-dollar companies. Like, I don't know, like maybe like they probably just move like Mag 7, but with a ton of risk because they're only a few years old. Now they're Anthropic's revenue has 10x'd. Can it do it again and again? Probably not. And I think with the open source models, now the open source models have their issues. I think it's overblown that everyone's just going to be running open source models, because I've tried them, I've tested them. they're not the same. It's not the same user experience as firing up your Claude with really good memory. It seamlessly works with all your stuff, and the average consumer is fine. Is going to be fine paying $20-100 a month for an incredible experience, and a really good harness. But I think it's undoubted. It's undoubted that no matter open source or closed source, you're going to need certain stuff. You're going to continue to need proprietary data, and you're going to continue to, like, I think these cloud service providers, Azure from Microsoft, GCS, Google Cloud Services from Google, and a couple others. To me, this is, I think cloud is probably one of the clearest bets. And maybe I'm biased because this leads me right back to one of my favorite assets, which is Google. But that's kind of, I know it's like a broken record here, but yeah, this is one of the few things that I think I can be grounded in, is like, you're gonna need cloud no matter how this plays out. You are gonna need cloud. You're gonna need compute, and you can't just like snap your fingers and add compute. It's kind of like, who has it? But all right, I'll Alex, equities, AI trade. What are your thoughts?
Yeah, I'm kind of like, what I'm really wondering is where we are in, like, with memory, because like, we've seen like quite a bit of weakness, and I'm just curious, what do you guys think? Do we?
No, I think this is cooked. I think this chart's cooked.
Yeah.
I think it's cooked.
It kind of
is. Like whatever. Like maybe that's the bottom, but I don't think we go back to those highs. I mean, maybe eventually. I think the air is completely out of that speculative bubble. Memory is important, and demand can continue to outstrip supply, but that doesn't mean the price of DRAM needs to go up.
Yeah.
I think, I mean, we had quite a huge earnings. I think it was last week with SanDisk, and I think it sort of like the aggressiveness of how do you think like SanDisk is going to sort of like continually, or any of these sort of like DRAM stocks, are they going to continually like grow earnings as aggressively as they have been in the past? And I think it's a no. So that does sort of like make me feel like this trade is over. Price action wise, I still think there's a lot to be desired. I haven't really seen some form of like really incredible bullish reclaim which is going to change the market structure on sort of like medium time frames, like maybe 4 hour, 12 hour, or daily. So I think when you look at those pieces of the puzzle, it does seem like the trade is done. It's probably gonna still chop a little bit, but I don't think it's gonna make a high unless there's a very strong sort of like catalyst, as good as sort of like this AI trade, that's gonna sort of like inject, I guess, like interest, and volume, and I guess like this sort of herd-like behavior that we saw with DRAM on the way up.
Yeah, I agree with you. I mean, this thing is in a clear downtrend now. The narrative is sort of cooked. The only thing that kind of looks potentially good is like, when you look online, there's definitely a lot of FUD out there currently, for a lot of the memory stocks. I don't know if you've been following what's been happening with Hynix, but like there were some concerns around like Apple, going for some RAM from China, and like just a lot of FUD happening there, and then also some concerns about like some IPO that's coming out of Hynix, but it's not going to be part of Hynix, all that sort of stuff. And I'm just seeing like a lot of retailers just completely freaking out, after we've corrected by 50%, which kind of makes me a bit interested again. So just from a market psychology point of view, it's kind of very fitting to have the sort of FUD at the bottom. That's kind of usually how it goes. Like FUD is the strongest when we're close to a bottom. So I wouldn't be surprised if we, maybe retest the lows on these things, or just continue chopping for like a month, and then we see some sort of dead cat bounce, like, which can be like big, right? It can be like a 30-40% bounce, and then we fuck off for the rest of
I think that's right. I think that like you can get a bounce, you can get a little move up here, but yeah, I don't think we're playing for the highs. I also wouldn't be surprised if after that dead cat bounce, you just get a continued. I think this is kind of an attention. Like, how do you explain that move from, call it like March? It was partly earnings, but I don't think earnings can explain that violent of a move. This is up multiples, so yeah, that's why I think the air is still kind of being let out of this. There's so much attention and so much leverage and speculation. To me, it seems more likely that rotates to something else. There's a lot of other stuff out there besides just DRAM. There's other kinds of memory, right? Like DRAM. Like DRAM's just one kind of memory. There could be some new narrative about a new kind of memory, or it could be the stuff that we talked about, right? It could be commodities. It could be compute providers. Could be something else. It could, yeah. So it doesn't feel like I think the trade is finished, basically. I think it's fine to have in a portfolio. I think the fundamentals are going to actually continue to do pretty good. People need memory. Like, it's pretty clear that memory is going to be needed. I think they're going to continue to grow their revenue and earnings. I just think that this mania, the air is still being let out, most likely.
Yeah.
So yeah, I'm much happier in even just like, I know this sounds like kind of dumb and too left curve, but QQQ, great place to hang out. It's going to be volatile, but like every day it's like, oh, Apple's losing and Google's winning, and then it's reverse. But all these guys are very well positioned as the incumbents. They're the most well capitalized, and the market's sort of misunderstanding their capital expenditures. Folks like Google and others are now, instead of just buying back their shares and giving out dividends, they're like, holy shit, this is like a once in a decade, once in a 20-year opportunity where we're going to plow this back into the business and truly invest. And that should be very bullish. And that's why I think, I can make a strong bull case for every one of the QQQ stock. The Mag 7, QQQ is about 50% Mag 7. The other 50%, I actually, you can make a pretty good bull case for those as well. I just think that incumbent tech stocks, whether it's SaaS or whether it's Mag 7, I think is mispriced here still, even though we're almost at all-time highs, and is a fine place to hide out and go focus on something else, right? If you can't quite find the next DRAM, I think you just hold the QQQ and you find something else, right? It could be in biotech, it could be in space, whatever it is.
Yeah. I don't have much of a strong view on like the Mag 7 or QQQ. It's it's kind of hard to have a strong view on like a $5 trillion company.
Yes. But you can make the same. Google's up what 10-20% since our call just a few weeks ago. You could see another one of those moves, right? Like you're seeing very high returns and pops from these kind of things because we just had, in some of them, a big correction. Now QQQ is only a few percent off its highs, I think you're just going to get like, it's just going to continue compounding, and it's going to lop off your left tail risk. But, you know, if you don't have a strong view, I think it's a good place to be when you don't have a strong view on what the next AI, you know, hot ball of money is going to rotate to.
Yeah, agreed.
That's it. All right, macro, real quick, and then we'll talk about trades. So last week we talked about Warsh. Our thesis was he was saying the right things in order to get the long end up. And I think that worked beautifully. He's trying to get inflation down without increasing the amount of interest payments on the US debt, and also appeasing Trump, right? So he didn't hike rates. I don't think he's going to hike rates in September. I think all he wanted to do was to get a steeper yield curve, which basically just means pushing the long end up. That's going to put a complete wet blanket on real estate, on a bunch of other areas of the economy, and fight inflation, basically. So that's another reason to be a little bit cautious here. It's not, you probably still want to keep some cash. Like, this is not the place to be all in on risk assets here. I think you want to be, I don't know, I'm like 75%, 80% invested in some of these, like in, you know, these very large assets that I like. This isn't, you know, I think stocks do well between now and the midterms. But yeah, I don't know. Like Warsh wants probably prices down in order to fight inflation. What do you guys think?
Yeah, I mean, the market is somewhat pricing a hike by October, which is interesting. So we're at 60% by October. Like 12% probability there's going to be 2 hikes, which is kind of crazy.
Yeah. All right. Well, then maybe that's the trade, is just like short that.
Yeah, probably.
Like what's the poly market odds? It's probably not as high.
Yeah.
But yeah, anyway, we don't have to look at it. But go on.
Yeah. I still have the same view that, like, it wouldn't make sense ahead of elections to sort of interfere with the elections, and like it would obviously not be good for Trump, right, to get a rate hike right ahead of elections, because the market would most likely freak out for a couple of weeks, and we, you know, like a 10-15% correction right ahead of elections, that's just a no-go. Not gonna happen.
Yeah, there's also some chance that something happens with the economy, the labor market, that maybe he wants the ability to cut, you know. And so I think to raise it and then cut it, and just like removing that, taking that off the board, is also probably something that he's thinking about. But he doesn't want Trump like tweeting at him every day because he hiked. And yeah, you know, I think there's like reports that Bessent and Warsh are talking like all the time, like way more than the typical Fed chair and Treasury secretary normally would. So I think it's safe to assume there's some coordination here and related to you know, the US's debt. So yeah, I think he wants some pain in order to keep inflation in check. So I think you see probably long end rates probably go up a little bit higher, back up to the prior high, which was I think you saw the 10-year at 5%, which is probably where we get to. We're not there yet. I think the 30 years around 5. Which is, you know, relating back to risk assets. Like, you can now you can hide out in the 10-year, the 30-year as a U.S. investor in a highest tax bracket. You know, if you're earning, you know, what is it like? I know, I think the 30 years at like, what is it? 5? It's like almost 6. I forget what it is, but either way, you can make like 9-10% on a after-tax equivalent yield. And like if you just made a bunch of money in AI stocks, that may be a fine place to be. So that, to me, that's like the competition for risk assets here, is you can earn like basically risk-free after-tax yield or tax equivalent yield of 8, 9, 10%.
Yeah, I mean, it's pretty crazy, and it's actually like one of the things that's probably gonna just worsen the inequality gap, because when you're rich, you don't even need to take the risk anymore because you're just getting so much risk-free yield, which is kind of crazy.
It's true.
So yeah, I mean, look, if you're sitting on like a couple mil or more, like I would just shove it all into into like 10 years or something, or 20 years, and then just chill. Like, why would you even take the risk?
Yeah. And I think that you have to relate to, is it the Bitcoin bottom? Is this the time to get back into DRAM? Like, I think it's all related.
Yeah.
And speaking of inequality, that's also another reason why Warsh doesn't necessarily want to hike. He wants the long end up, not the short end, because when Powell raised the short end, it ended up making the K economy even more extreme, right? That the wealth gap got even wider because all the folks sitting on cash could now just like basically earn way more by keeping it in like money market securities and T-bills. And Mag 7, who has a ton of cash, is just like, and can borrow very cheaply, can basically just like print money, because the short end was going up. He was right. He was hiking rates until like 5, 6, 7%. And no, it was like, whatever, 4 or 5%. Now I think that's kind of what Warsh is trying to do, maybe, is not make that same mistake. Is let's get the long end up. Let's not do that same thing that Powell did. Another reason why you could fade a rate hike, I think.
Yeah, agreed.
All right, trades. Let's talk about specific trades. It could be something we talked about, or I think we should talk about some delta neutral trades as well. Any kind of arbitrages or carry trades we're seeing. But let's start with some of the assets we just talked about. Bitcoin, gold, commodities, equities. Are there any clear setups here that you guys like?
I kind of like Bitcoin, and I like to express it via call options. Specifically, I'm kind of having my eyes on call options like 2 months out, basically. So we're like calls are currently trading at around like 33 vol, which is which are like historical lows on BTC vol. So I'm kind of slowly getting bullish on Bitcoin. I think vol is extremely cheap. The market is not realizing as much as the options market is implying yet. So you're actually still getting paid to short vol, but it's kind of always been like that over the summer. So sort of ahead of any vol expansion that we've had, like I'm thinking like summer 24 or 23, where like the market is just like going nowhere, and it's like in a very tight range, and implied volatilities are also coming down because there's just apathy, and like no one is interested in speculating. And then you suddenly get vol expansion, right? Like the market comes back, and then you see just overall the market realizing a lot more vol, and as a consequence of that, implied volatilities are just gonna pick up a lot. So when you buy call options here, you're kind of getting paid, or potentially getting paid, like a lot more, because You can obviously make money on the delta. You can make additional money because probably implied volatilities are gonna rise sharply. So we're trading in the low 30s. It's certainly conceivable that we're gonna trade back into high 40s, low 50s if we get a violent move. And then you have you still have negative skew, like between 3 and 4 points negative. So that's probably also going to reverse. So you're getting a few vol points on top of the just implied volatility increase. So that kind of just strikes me as a very attractive opportunity to just start slowly scaling into some September, maybe October calls at very low implied volatilities.
And these are just straight calls. Is it any more complex than that? Does it need to be?
No, I'm currently loading up on September and October 70K strike calls.
Wow. Yeah. And let's say that happens to be the low. Like, let's say we bottom then. What does that trade look like?
You mean if we...
yeah, just like in terms of risk management, like what... yeah, like, so if they're expiring when, let's say, the bear markets have historically bottomed about a year from the prior highs, what is that like? Yeah, like, just, is there any way of offsetting that potential outcome?
I mean, you could potentially just delta hedge it. Yeah, like I'm kind of willing to make that bet now, because I think it's we maybe have like a couple more weeks, like 2 or 3 weeks more of chop tops, and then I think we're gonna start moving. So I slowly want to be allocated. Like I'm currently 25% allocated to my target position in those calls. But yeah, just basically DCAing into those calls over the next 2 or 3 weeks. If the market doesn't move, I mean, yeah, like you're gonna bleed some beta, but it's not so bad because they're longer dated, and just implied volatilities are so cheap, so you're not gonna bleed a lot.
Michael, do you like the IVs here?
I think they're quite. I think, yeah. One thing I picked up over the weekend is, people are buying the IVs this weekend. You sort of saw a jump. I mean, you can see there from 14th of August. I mean, not 14th. Basically, like 8th, when the vol crash happened on Friday, you saw an accumulation of vol. So I think that's a good sign. There are some buyers positioning. It's not been the case recently because realize has been pretty bad, and people are not expecting moves, but there has been sort of like a little bit of a shift. So I think it's a good move, sort of low risk reward, just because IVs are so low. Skew is also quite, it's been favoring puts for a while, so it does make sense to sort of like, this is the best sort of like asymmetric return for sure. Yeah, but yeah, I don't have really much more in terms of what is the right trade here in terms of like BTC options. That's sort of just clearly the trade. I think even just pushing for like sort of front end vault selling, which is what Alex touched on with the VRP, or sort of like you're getting paid to short vol. I think it's a bit dangerous, because it seems like right now, people are like, this weekend there were people buying the vol. So if you're shorting vol, it's not really going to pay as much, and it doesn't make sense to sort of like sit there. So yeah, that's my view there.
Yeah, the market is also just overall, when you look at options flows, it's also slowly coming back. not a lot of volume yet, but when you look at the strike flows here, red are sells, blue are buys. You can definitely see some some moderate buying starting to come in, like in those closer to at the money kind of strikes between like 65 and 70K. There's some calls getting lifted, and then being financed by selling some puts, and I think it's mostly like call spreads, like sort of in this 65 to 70, and then like selling some 75 80K calls to make it a spread, and getting some extra premium by selling some 60K puts here. So also starting to look a little bit more constructive. Obviously, those are not like gigantic flows. We haven't seen like the big funds return yet, but a couple thousand BTC notional getting lifted here and there. That's at least a little bit constructive, I'd say.
Was on mute. Yeah, that does actually look fairly attractive. May put on some of that myself as kind of a form of DCA. All right, separate from Bitcoin, let's workshop a trade here. I am bullish Tesla right here. So, what options do you guys like between now and the end? Like, let's say you think Tesla's is gonna get back to its highs between now and let's say the next few months, October, November. I don't know. I think I think it can make a run to 500 or something close to it, and eventually goes higher. What is the options play that kind of maximizes that move, but maybe capture upside and downside? Is it a bull spread? What do you think?
You're really killing me with Tesla here.
I know, it's the most left curve name out there, right? It's like got a rabid fan base, and it is. I think it's down way too much.
Do you think this is the bottom for Tesla, or like?
Yeah, I think it bottomed. I think it bottomed this year.
You can sell puts and long calls. I think that's like the best you can do. Just completely bullish. Risk reversals are sort of like the type of trade, especially since you think that the bottom side is capped. Might as well like collect some premium, and then use that to sort of like fund your bullish view in terms of price target. So I'll just say going for bullish risk reversal. You could also, I'm not sure what the vol is on Tesla at the moment, and we're
on like monthlies, it's around like low 40s currently.
Which is, come on, very attractive.
Fair.
Yeah. So I mean that's also, it's not too high vol, so you could actually just go on that bullish risk reversal. I don't think you need more. In terms of maybe normally you could also do sort of some form of ladder where you also short a call just to find the position, but I think just going for a naked bullish risk reversal makes sense. And yeah, you can ride it. It's a very aggressive position, but if you believe it's bottomed and you're willing to go for it, that's the one I always sort of suggest for sure.
Like maybe places strikes around like potential support resistance levels. I think that always makes sense, because like anyway your goal is probably not to touch the position a lot, so you kind of want to hold it till expiry. So kind of makes sense to structure it around like obvious levels. So I think 300 is like the very obvious support level here. So you might want to short like a 300 strike put, and then what's like a good level for in terms of resistance? What do you think, Michael? Like 420? that kind of strikes me.
To me, perfect. I think that's perfect. I like also pushing for like a form, if you're trying to like remove the risk of uncertainty. I like sort of like targeting an area where it's a sort of an inflection point, like a reclaim, like where it's like, okay, if it goes to this level, it's either going to continue or it's going to reject. That's also somewhere where I'm like, that's nice. And I think that's like 370 is also like
Yeah.
a really good area, because once it's there, you sort of like a 50-50 in terms of whether it's going to sort of like make a lower high, or is it going to go up and then sort of change its market structure. So I also like that as a nice target for a strike, strike.
Agreed. Like in the short term, like if I would trade this with options for over, let's say, like a month or so, I would say I'd probably pick like the 300 put, sell it, buy like a, call it 340, call and sell like a 370 against it. That's gonna be like more or less premium neutral, and then I'm gonna capture the upside until like the next big resistance.
Yep. And I can just use the OrderX platform with Derive to put that on. With Derive's Tesla.
No, I don't
options.
have
Does Derive have options? Do I have Tesla?
No, they don't. Yeah, they don't have any stocks. I think right now there's not no on-chain
they're
sort
just
of
using crypto.
RWA except for gold.
Okay. All right. So this will be, but yeah, I can still do the kind of the brokerage integration to put this on with StoneX or something like that through OrderX.
Correct.
I think that's what I'm going to do. All right. I got my trade here. Because instead of like, what a trade I like a lot is just buying it here, just buying spot. But I think there's probably a better setup, and I think you guys just laid that out very nicely. So yeah, I think we can end it there. Final thoughts from anyone before we wrap things up?
Michael, did you share your trader already?
Sorry. Trade for the week. I think on my side I'm very short time frame, so I'm just looking for what's moving. And I think what's interesting to me is SpaceX. I think really aggressive move last week Friday. Are we gonna get continuation to 150, right? Like, I think that's quite interesting. Or are we just gonna continue sort of like bearish market structure, continue bleeding down? So I think that's where my eyes are going to be looking at in terms of stocks. And then, commodities as well. I think it's the same sort of situation, really aggressive move. Are we going to get continuation, or are we going to get like a rejection, pullback? So those are sort of like where my eyes are going to be looking for in terms of just, trades for the week.
Yeah, SpaceX looks interesting. It kind of looks bottom, but then you look at the unlock schedule and you're just thinking, yeah, this is just like more exit liquidity getting generated, like making some retail people FOMO in again into this thing, and then institutionals dumping on them.
Yeah. To me, this little pop here can look. They had a good earnings. It was about as good of an initial earnings quarter that you could hope for after an IPO, and extremely bullish fundamentals behind the company. But I don't think that can offset the sheer amount of unlocks. This is still like 5-6% unlocked here. We're going to get to 40% in the next couple of months. So yeah, I on all the, and everyone's up, everyone's like way up. The VCs, and a lot of folks are up, and so they're just going to want to take some profits and diversify at the very least. So yeah, I'm still on one hand, you could say, look, let's not get too cute. Let's just, start buying now. Many people were waiting to buy under 100 or at 80. That's where I'm waiting. But, yeah, I think it wouldn't be too bad to nibble here, but I'm personally waiting for around 80. I think it'll get there, at least under 100. And so I'm not in any rush here. I think maybe similar to, I don't know. I don't know if it's, probably similar to Bitcoin bottoming is probably when a lot of things are going to be bottoming together. And so I think you want to have dry powder ready for them. That's
Yeah.
my view. I know you guys are taking the plunge now, but we will see.
Yeah. Probably all the meme coins are gonna bottom at the same time. Like SpaceX is just one of them.
It's just another meme. Yeah.
Yeah.
I think altcoin trading and meme coin trading prepares us well for stuff like DRAM and SpaceX and SK Hynix.
Yeah.
It's just attention.
Right.
All right, boys. This has been another fun one. Looking forward to the next one. Good chatting with you guys. Thanks for sharing.
Thanks.
Bye-bye.
Until next time.